Buried beneath all the headlines from last week, the Social Securities Trustee Administration released a startling report. So tune in for the rest of our video to find out what that was, along with what happened in the markets last week, and we'll take a deeper dive into the Dow Jones transports.
The returns from the major indices were all over the place last week. The S&P 500 was relatively flat, but as you can see, year-to-date up about 5%. The Dow Jones was down around 1%, and the NASDAQ, again, was the leader, and year-to-date up almost 13%. Foreign and emerging market stocks were both negative last week, with foreign down around 0.5% and emerging markets down about 3% year-to-date. The chart that we're looking at this week is of the Dow Jones Transportation Average Index. And the reason we're looking at the Dow Transports this week is because anytime goods are made, they need to be shipped somewhere. So normally when the Dow Jones Transportation Index is doing well, it usually is a good sign for the economy and the markets as a whole. So as you can see on this chart, the Dow Jones Transport has been on a long-term uptrend since about the middle of last year. And last week we saw this index actually break out, and that's right above the middle blue line at 10,800. Now we're going to see what happens throughout the rest of the summer with the transports, but we're looking for a move back up to that top blue line around 11,400, because as I said before, if the transports are doing well, that could translate to the other sectors of the market and could be a bullish sign for the economy.
Last week the news headlines were filled with things that could potentially move the markets worldwide. And they did. First, the G7 summit kicked off, and that turned into a war of words over trade and ended abruptly as President Trump left before the final ceremonial joint press conference. And as one summit ended, another began. And the North Korea summit kicked off with a historic handshake between the United States and North Korea. And it seems like negotiations are going well, and hopefully they'll continue in the future. The Federal Reserve met Wednesday, and as expected, they increased interest rates by 0.25%. But unexpectedly, they shocked the market by saying that they're going to actually raise interest rates 4 times in 2018 instead of the previously announced 3. Aside from interest rate news, the trade war with China is back on, and $50 billion worth of import tariffs were put on Chinese goods, and China responded by putting $34 billion worth of tariffs on goods imported from the United States to China. So we're going to have to see how this trade war plays out, because both of those tariffs from both of those countries come into play at the beginning of July. But the most significant piece of news that came out last week, in our opinion, was that the Social Securities Trust Report came out, and they actually stated that they needed to dip into the Social Security Trust Fund for the first time since 1982. And this is significant because they didn't expect to have to dip into the Social Security Trust Fund until approximately 2025. And they also stated that if things aren't changed, by 2034, Social Security checks are going to be cut by approximately 23%. But the bad news didn't stop there. Medicare released their report as well, and they stated that the Medicare Trust Fund was going to be depleted by 2026, 3 years prior to what they expected. In the coming weeks ahead, we're going to see all of the fallout from the news from the past week, and we're going to also see how the markets are going to react.
About halfway through the year, the S&P 500 is on track to have its 10th consecutive year of positive returns, and that's something that has not happened ever.
Thank you for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Share this Facebook video and like our page, and we'll see you guys next week.